Hey, everybody. Thank you for joining us on today's ADT. And our hot topic is life insurance, right, Steve? Awesome.
Yeah.
And so it's a very important topic for sure. And I know that it's not an easy topic for agents to actually talk to their clients about, but it is a necessity. And the peace of mind it'll end up bringing, unfortunately, in their time of need, cannot be overemphasized. So, with that, we hope that you get some good tips and ideas from what Steve's going to share with us today. So, Steve, I will let you take it away and I'll monitor the chat. And please do sign into the chat for attendance today.
All righty. So let me share my screen here. All right. Can everyone see that okay?
Yep, we can.
Okay. So the topic of today's module is life insurance 101 and basically what we're going to do is we're going to focus on how to do a needs analysis and we're going to talk about some term life options. Next week, I think we're going to talk more about the permanent plans, hybrid plans, some of the bigger cases that you can do, like buy-sell agreements, stuff like that with life insurance. But one of the things that I learned many years ago is so many people, when it comes to selling life insurance, they want to figure out how to do all this permanent stuff and IULs for retirement and all these big things when the reality is statistics tell us that most people don't have enough life insurance. Okay. Matter of fact, LIMRA says the average person is 100 to 300,000 short on what they need if they die unexpectedly. And so I learned several years ago that the very first thing that when it comes to getting life insurance is to make sure everybody has their number. Because the thing about life insurance is what most people do is most people pick a number out of the air. 100,000 sounds like a lot, 250, I'm going to do whole life, 50,000 whole, that's all I need. And like I said, according to Limmer, most people are 100 to 300,000 short on what to do that. And so the easiest thing for us to do is actually learn how to do a proper life needs analysis and then backfill it with term. And then once you take care of their number, then you can look at life insurance for all the other things. But if someone doesn't have their number, I'm not even concerned about IULs or anything like that. Okay. So, with that being said, the other issue, and Sandra brought it up earlier, is that a lot of people in our business have a hard time switching over to life insurance because, again, most of our leads are health or Medicare. And so it's kind of like there's this awkward transition into life insurance, even though life insurance is the only insurance we're all guaranteed to use. Okay. We buy homeowners insurance, we may never use it. We buy car insurance, we may never use it. We buy health insurance. See, all those insurances are what I call reactive. Something happens, then I need to use the insurance. Life insurance is the only insurance that's proactive. I can tell it what I need it to do before I ever need it. And most people don't even, they spend more time figuring out where they're going to go eat on Friday night than they do to protect their family's financial legacy. Okay. So we're going to kind of talk about that. And the easiest way to do it is you create the need for life insurance during the P4L presentation. Okay. And so a few weeks ago, we talked about the P4L. And again, one of the things that we talk about is we talk about the fact that medical bills are the number one reason why people file bankruptcy. And most of the people filing medical bankruptcy actually have health insurance. So why are they filing? Lost income. Well, guys, when we think about life insurance, if a breadwinner dies unexpectedly, that's the ultimate loss of income because they're never going to get it back. I can be disabled for a month or two and I can go back to work. But if I die unexpectedly, my family will never get anything from me again. And so when we sit there and think about this, our whole job is to protect people from medical bankruptcy. That's what makes this so important. It's this three component solution that if people want to reduce their chance of medical bankruptcy, there's three things they're going to need. Number one, they're going to need a good health policy to take care of the medical bills. Most people would benefit from supplemental income protection like an accident wise critical guard to replace lost income. But life insurance is also part of this equation. And that's why I like this slide so well, because again, I've illustrated this before where a lot of people in our business, we've got health, we've got subs, and we've got life, and they're disconnected. This slide shows it's all connected because everything that these three things offer are one thing and one thing only: income protection. And so I've built my whole business around helping people replace lost income. I don't look at myself as someone who sells health insurance. They don't need me for health insurance. They can do it themselves. They can go to the marketplace. They can find some goofy agent over the phone that's going to take care of their health insurance. What makes us different at Health Markets is we talk about replacing lost income. And I built my whole business for the last 29 years around that. And so the way that you create the need for life insurance is when you're doing the P4L at the very beginning, you let them know that medical bills are the number one reason why people file bankruptcy. Most of the people filing medical bankruptcy have health insurance and it's due to lost income. And so we're going to talk about the three component solution, which is health, subs, and life. So that way, when you start talking about life later on, they're not wondering why you're bringing it up. You've already set the stage on why it's so important. Why? Because it's one of the components to protect people from medical bankruptcy. Does anyone have any questions on that? Is that too hard to understand? Because it is the key to what we do. And as soon as you start believing that, you're going to find that talking about subs and lives are going to become a lot easier. You're not going to get a lot of the objections like, I don't need that stuff. It's going to be, yes, I'll take it or I can't afford it. Okay. Because it's all tied into reducing their chance of medical bankruptcy. And so what we can do to find out how much life insurance they need is I use the bottom of page 3 on the fact finder. And it looks like this. Now, I usually don't do this on my initial fact finder. So some of you we've just gone through my presentation of I sell, introduce the process with the P4L slides, size up their situation by completing the fact finder. I do not talk about life insurance at that time. I talk about life insurance after we've taken care of the health and the subs because I believe life insurance needs to be its own separate appointment. So a perfect way to do that is after I've done my health and my subs, is I'm getting ready to end that initial appointment, I'll tell them now, there's one more thing we need to talk about, and that's your life insurance. And so I literally will just go to page 3 of the fact finder, and I really don't ask the questions on the fact finder because a lot of you know some of these questions, I don't think they're good questions. That's just me. You can ask them if you want to. But where it says, do you feel your family has enough life insurance, yes or no? I just ask, I look at the primary breadwinner because I already know this because we just did the health app, so I know what their income is. Okay. So I'll look at the primary breadwinner and say, do you have life insurance, yes or no? And if they say yes, how much do you have? Okay. And you'll be surprised on how many people have no clue what they have because that's how little they think of life insurance. Okay. So let's just say they told me they have 100,000. Okay. Then where it says, how much are you paying monthly? Again, you guys know I never ask budget questions, but that triggers in my mind if they're married, how much does your spouse have? Because I want to see how much the wife has, okay, or the husband. Then what type of policy is it, term or permanent? That's very important because if they have 100,000 and it's permanent life insurance, I'm not going to try and replace that. I'm going to leave it alone. But if it's 100,000 of term, I'm going to replace it. Okay. And then is it through an employer? Yes or no? Why is that so important? Because when people have their life insurance through their job, what happens when they lose their job? They lose.
They lose their life insurance.
Exactly. And so you've got to let them know that's, now again, if you want if you've got a good deal for life insurance through your job, take it, but go get yourself your own policy that's not relying on your job. Does that make sense? Because people don't think this way. Okay. And then so once I gather this information, I'll say, now, we don't have time to do anything right now, but let me do a quick needs analysis to make sure you have enough. Is that okay? Now, why are they going to say it's okay? Because earlier during the P4L, I told them that life insurance is one of the reasons why people file medical bankruptcy. So they're not going to give you a lot of resistance here. Okay. And if you'll also remember, for those of you who've been with us for a while now, there's this lie, steal, lie, and hide. We talked about the prospects buyer system. Again, they're going to want me to do the work to make sure they have enough life insurance, but they don't want to pay for anything, and I'm okay with that. Okay. So then what I'll do there is I'll turn to page 4 of the fact finder, and we'll do what's called the dime. The dime needs analysis. That's debt, income, mortgage. Here it says education. I don't use it for education. I use it for end of life. I think if you're going to buy life insurance for education, that just needs to be a separate policy because you're not going to need it as long as the other things. And so what I will do is I will just literally ask them, how much debt do you have, not including your mortgage? I mean, your auto, student loans, credit cards. And they'll give you a number, and I'll put it in for them and their spouse if they're married. The next thing I'll say is most financial experts recommend 5 to 10 years of income replacement. Which would you be comfortable with, 5 or 10? And I'll circle it right here because I already know their income. So if they make 50 grand a year, I just got to multiply that times 5. Then, do you have a mortgage? Yes or no? They say, yeah. How much do you owe? And then finally, I just put in 25,000 for end of life. That'll take care of the funeral, the party, whatever, okay? And so when we do that, let's just say we have this example because this happens all the time. So keep in mind, someone just told me they had 100,000 in life insurance, and then I do this and we find out they're way short, okay? So let's say they told me they had 50,000 in debt. Their income was 50,000, so that's 50,000 times 5. Maybe they have $175,000 left on their mortgage and then 25,000 into life. So they have a $500,000 need. That's their number. Why is it their number? Because they told me their life. Remember when we talked about getting people emotionally involved? This is how you take people through a pain funnel for life insurance. Who's well? I've got 100,000, I'm all set. Well, let me do a quick list.
Uh-oh, I think we lost him. Oh, there you are.
Wow, that just kind of popped off and
I
on.
know. And now you're in the middle of my screen.
Oh, let's move that. Can you guys
I
still see my screen?
No, you have to reshare it.
All right.
That was weird. Maybe there's spies listening and they got cut you off.
Yeah, and now I can't. Here, I'm going to escape from this because I cannot find my cursor.
Oops. That's so strange. You should still be able to share. Any questions while Steve's trying to get back up and running?
All right, can you see my screen again?
Yes.
Okay.
It's a little small, but yes, we can see it.
All right. I think we're back.
Yep, finding their number.
All right. So now again, you may find that, they're 100,000 short, 200. They may have more than they need. And in those cases, if they have like, let's say they have 750,000, but their number's 500,000, well, Steve, what do you do then? You pat them on the back and leave. They don't need any more of their number. They may still need more for other things like hybrid long-term care stuff. So again, I'm not saying they don't need life insurance. It's just they've got their number taken care of. But guys, I've been doing this for a long time. It's very rare you come across people who actually have their number.
Mhm.
Okay. So once you get this number, here's how you close for the appointment. Well, Sandra, based on the numbers you gave me, if you died unexpectedly, your family's about 400,000 short. Are you comfortable with that?
It concerns me.
Okay, well, let me do some shopping for you. When would be a good time for us to get back together so I can show you some options?
How about Friday at 10 a.m.?
Schedule the life appointment, guys. See, when you again think of pain funnel, well to sick to critical to miracle. So people are well. I already have life insurance. How many of you ever heard this? I've got life insurance. I'm all taken care of. Great. Let's make sure. Oh, geez, you're a couple 100,000 short. Are you comfortable with that? Well, no, not really. All right. Well, then when can we get back together? Let me go do some shopping for you. And that's just how you do it, guys. And if you just approach it that way, you're going to find that it's so much easier to talk about life insurance, especially if you purposely set up another appointment. Now, here's the nice thing about setting up another appointment. The first time you showed up, were you a stranger?
Yes.
But they decide to buy from you. When you show up the second time, they've already done business with you. That's building that relationship that we've talked about. Okay.
And you're there to take care of them and their
Yeah.
family.
And again, I run a lot of appointments where I show them their need and their stuff, and they're like, Steve, we just can't afford that right now. Okay, call me. But see, now I have a talking point every time we talk. So it's, next year at the open enrollment, hey, Kevin, now that we've got your insurance done, hey, you're still a couple 100,000 short on life insurance. You want to deal with that? When do you want to take care of that? I mean, it's just, and there's going to be some people they're never going to be able to, but at least they know. And at least you know that you've done your job. Because our job is just to show them. Our job is to let them know they're still exposed and let them cover the exposure. And they may not, some people may not. But if it's a deal where now all of a sudden you're dealing with a grieving widow who got $100,000 life insurance and now her world's going to be turned upside down because they don't have enough money to do everything they needed to do, and you never even talked to them about life insurance, that's your fault. You need to own that. Because again, my whole business revolves around the fact, and again, we talked about this last week. After I saw what happened to my Uncle David, I made a decision. I'm never going to do that to another human being again. I'm always going to let them know where they're exposed, and I'm always going to let them cover the exposure. That's just my job. Their job is to handle it. Okay. So, any questions on doing a needs analysis like this? So, like I say, if you talk about it during the P4L, that it's part of the equation, and that at the end of the presentation, before you're wrapping it up, you're literally just setting the stage for another appointment.
And if you're new at doing this, I would encourage you use your own situation as an example to practice on yourself.
Yeah, do a needs analysis on yourself. I guarantee you, most of you are probably short on what your family needs. If not, pat yourself on the back. Good job. Okay. So let's talk about some options. So now we know there's a need. There's a 400,000 need. So, like I said, if it was 100,000 in permanent, I'm bringing in a $400,000 solution. If it's 100,000 in term, I'm bringing in a $500,000 solution. I'm going to replace that term. Okay. So that's why I ask, is it term or permanent to determine how much I need to fill in their gap. Okay.
And many times they don't even realize how long their term policy really is for.
No.
And sometimes it's like, oh, it's going to be over in a year or two. Hmm.
Yeah. Yeah. They're people, they're just clueless. Okay. A lot of times there's a lot of people that got divorced and their ex-wife is the beneficiary because they never changed it. You want to talk about being someone's hero? When you start talking, hey, by the way, who's the beneficiaries? Oh, it's my ex.
I actually had that happen.
It does happen all the time.
Yeah, well, there was a claim filed, and unfortunately, it didn't go to the current spouse.
Hmm. We had an actual rep at Health Markets whose ex-wife got $2 million when he died in a car accident, not his
Mhm.
current family. So guys, we do it ourselves. So you've got to help people along. So we're going to talk about some life insurance options. I think when it comes to getting people their number, in my opinion, there's really only two companies we need to know. Okay, so the first one is Ethos. Ethos is very simple. It's all done digital. My job here is not to teach you Ethos. There's all kinds of things you can watch. They have master classes you can do. But basically, what I would do is I would just go to Ethos. And in this particular case, when I did this quote, it was a 43-year-old. And so the cool thing about Ethos, when you go to their website, you can actually use this toggle switch for coverage, or you can just put in premium where it's like, hey, I got $75. What will that get me? Okay. And obviously, you've got a number of terms. Now, Ethos is the only carrier I think we deal with. You can do a 40-year term. Okay. Most of them end at 30. But for this particular case, a 20-year term, because what I try to do is I try to get people, as close to 65 as I can. Okay.
Hey, hey, Steve, sorry for the interruption. How old is the individual that you are using here?
43.
Thank you.
43-year-old male.
Yeah, if they're older, they might not have a 40-year term
No.
option.
But again,
So
that's the nice thing. It's going to tell you what
it'll
they
tell you.
get. Okay. And so you can just literally toggle on these. Oops, let's go back. You can toggle on these and it's going to change the price. Or you can move this up and down and so the nice thing about Ethos is you can, once you get them interested in buying it, you can figure out what you need to do here. Okay. But in this particular case, for a 43-year-old, a half a million is $84.73 a month. They're either going to take it or they're not. They're either going to lower the policy term, they're going to lower the amount, whatever. Okay. Um, but that's a decent premium for a 43-year-old for a half $500,000. Okay. Now, when we look at Ethos, again, life insurance is the largest commission products we have. And so for a tier one agent with Ethos, it's 63%. So if I sold an $84 premium, I'm going to get advanced $482 as a tier one, and I'm going to get almost 1,300 FYCRs. Tier two, it's 581 and 1,500. Tier three, it's 636 and almost 1,700. And then someone like myself is getting 674 and almost 1,800 FYCRs just on one product. Okay. A product that they self-identified they needed. So that's just the regular Ethos term.
Mhm.
Okay.
And
Now,
Steve, is
yeah,
there if there is a question? Is there a guaranteed issue for someone who is 35 years old?
I don't know.
I I think
I
Ethos guaranteed issue whole life, but I don't know if it's for that young.
Yeah, I think it's 40.
I think it's 40.
I think it's 40, yeah. All right. Now, Ethos also has a plan with living benefits. And the name of the game now in term insurance is living benefit plans, because what living benefit plans are is, see, a regular term, you die, it pays. That's it. But according to LIMRA, 98% of all term plans never pay a death benefit. Why? Because people outlive the term. But when you can sell a plan with living benefits where they have access to chronic and critical illnesses, now it's kind Silas likes to call living Swiss Army knife. In other words, if I'm going to pay a premium, I want to pay a premium where I have multiple uses. And because of medical advancements over the next 20, 30 years, I have a better chance of having a heart attack, cancer, stroke, and not dying than dying. And so living benefits are plans that can help you with that. So how it works is, again, according to the CDC, 1 in 4 Americans will experience a disability in their lifetime. Eligible applicants can get a maximum protection against the odds with a critical, chronic, and terminal illness. They're called accelerated benefits. Okay. And so basically, a terminal illness is 12 months or less. Now, a lot of companies have terminal illness riders built in there. That's not new. But what is new is chronic illness, which is the inability to perform 2 activities of daily living, like dressing, eating, bathing, toileting, for at least 90 days, or a cognitive impairment. Well, Steve, that sounds like long-term care stuff. It is. This is kind of a starter pack for long-term care. And then there's the critical illnesses, which is life-threatening cancer, burn, stroke, coma, heart attack. I mean, there's a number of different things here. And these living benefit plans actually offer more conditions than our traditional critical guard plan does through United Healthcare. And so how this plan works is basically what you do is if you get, let's just say you get cancer, you can actually accelerate up to 90% of the benefit and get a living benefit. Now that doesn't mean you're going to get 90% of 500,000. What they do is they do what's called life expectancy evaluations, and they're going to offer you cash based on how long you're going to live. And so in this particular case, they had a $500,000 benefit. She got diagnosed with, or this person got diagnosed with stage 3 prostate cancer. And so they based it on a 55% life expectancy. So out of that 500,000, the person got 180 something thousand in cash. They paid 2,400 in premium. So Zane, can you unmute for a second? This is not a trick question. I need your help.
Yep.
And you're a smart guy. Okay. So if you gave the insurance company about 2,500 bucks, and then 2 years later, when you needed it the most, you got over 160 something thousand dollars. Is that a good deal for you?
Yeah, I'll take that deal all day.
Exactly. Because again, the chances of you dying are slim to none, but the chances of you getting cancer, 1 out of 2 men, 1 out of 3 women are going to get cancer, heart attacks, strokes. So living benefit plans are, again, my preferred choice of life insurance for people to get their number because it's going to do 2 things. It's going to give them their number if they die, but more importantly, it's going to give them access to cash if something bad happens and they can't work and stuff like that. Okay. So this exact same plan with Ethos, 500,000 is 110.67. So it's about 20, 30 bucks more for the same coverage, but it does more. And so when we look at that, again, same commissions, but now as a tier 1, I'm getting 630 bucks all the way up to almost $900 and 2,300 for a tier 4. So that's Ethos. Now, I will tell you with Ethos, yes, it's all done electronically, but in a lot of cases, Ethos is going to have stricter underwriting than other companies. So Kevin, can you unmute for a second? Because you just told me about a story of someone you tried to get Ethos and then you did Transamerica and got a lot more, correct?
Yeah, so they think about it as like a credit check, right? They're looking at your history on paper. So if you had something in the history, they ding you for that. So they're not taking in everything that's current. They're just looking at the overall picture. So I had someone applied that 20 years ago, she had anxiety and depression. So she was on medication, which they're running your underwriting while you're doing the application. So they have all this information. So they APS'd her application on Ethos. So then I've done applications before. When it gets APS, attending physician statement, it could take 3 days or it could take 2 months for them to fill out that paperwork. So I suggested we go to Transamerica, and I got to approve. I put the application in on Friday and we got the approval on Monday. Same death benefit. We're doing the term with living benefits. Application process is still the same, answering the same questions. We answered them the same way, but they were able to, their underwriting was a little more lax than the Ethos, because Ethos is all digital, so they're not taking into account what they are currently taking. It's taking into account what their prescription is currently, I guess. So
Yeah, so again, thank you, Kevin. There
Yep.
is some advantage to using Ethos because I mean, you literally can send someone a link and they can do it themselves. But I think to get the all-around best coverage going through companies. Now, again, Transamerica, they're making their stuff a lot more digital too. Um, but because they're willing to kind of put the human element in it, you can sometimes get more coverage or the same coverage for a little bit lower premium. And so again, when it comes to Transamerica's life options, their living benefit plan is actually my go-to plan for everybody. And the biggest reason why is they have a rider called an income protection option. And how this works is it's an option that lets the owner structure the death benefit by controlling the payment amounts, who receives them, and for how long. So when you think about this, many people who receive a large sum of benefit, whether it be an inheritance, lottery, life insurance, spend most, if not all of their funds within a few years. Why? Because most of us don't know how to handle $300,000. Okay. We go about buy a Jaguar with it. Okay. Um, so what the income protection option does is it remember how I said life insurance is proactive? So you can actually set this up to where instead of them getting a lump sum payment, they can actually get a paycheck. So when you think about what we just talked about in income protection, this fits so well into our story because they can get guaranteed payments for the loved ones. It's a flexible structure on the death benefit, the designated payments for those you love, long-term reliable monthly payments instead of one lump sum, and lower premiums for the same death benefit. Because think about this. So first of all, you've got two scenarios. One scenario is my beneficiary gets this big lump sum and blows it. That happens all the time. The second scenario is my beneficiary gets a big lump sum and does everything right. She finds a financial planner, they diversify it and all this kind of stuff. And then COVID hits and the stock markets crash. Where'd all that money go? It's gone. And the only way it's going to come back is time. The beautiful thing about the Transamerica Living Benefit is they're just going to get a steady paycheck every single month for the length of time that you design it. And so, well, how do you do it? So, first of all, what you want to do is you want to do what's called the initial lump sum. So, that's going to be covering the funeral expenses, help pay off the house if they have one, pay up the debt. So, the very first thing is I do want a lump sum to take care of all the debt, take care of the funeral, so my family can start clean. Okay. Then I can determine a guaranteed monthly income for up to 25 years. Now, again, like I said, I do 5 to 10. You could do 25. Where would the 25 come in handy? Well, if I've got a 1-year-old, I might want to, and my wife's a stay-at-home mom because my wife is a stay-at-home mom. Well, if I have a 1-year-old, I want that to go for at least 15 to 20 years so that if I die, my kid doesn't lose the mom and the dad on the same day because dad's gone and mom's got to go work 3 jobs now. So if I can create a paycheck that's going to at least get it to where the kids can take care of themselves, that's a phenomenal benefit. And then the last thing you can do is you can put in a final lump sum. I really don't ever mess with that. Um, but again, it's the just big thing of I want to get them the initial lump sum to take care of the debt, and then I want to provide a paycheck. So in this example, if I was dealing with the person who needed a $500,000, based on the numbers they gave me, the 50,000 in debt, the 175 for the house, and the end of life, I would have built it to where they're going to get $260,000 at death. That's going to that's going to take care of the house, the debt, and the funeral. Then I set it up to where they're going to get $4,000 a month for 5 years. So guys, when we do that, 4,000 a month times 12 is 48,000 times 5, that's 240,000. Then you add 260,000 to that. There's your $500,000. But here's the nice thing I like about this. They only need to buy 488,000 in life insurance to get the $500,000 payout, which means I can get my family what they need at a lower rate than other companies because I'm not buying as much life insurance. Why? Because when you spread out the payments over time, they're using some interest and stuff as well. Okay.
That
And so
guaranteed interest.
the
Yeah,
other
it's
thing
that two, I'm
is,
sorry, it's that 2% guaranteed interest.
yeah, it comes out to where, but it's not on the 4,000.
Mm-hmm.
You when you actually read the whole thing, it explains it. It's a very small tax consequence. It's very minimal because you're only paying tax on the interest. You're not paying tax on the 4,000 because it's the life insurance product. And death benefits aren't taxed, but because they're using a little bit of interest, they're getting taxed on the interest, which again, it's a small number. Okay. It's kind of like the interest we get on our advances. It's not a big deal. Okay. Now, the other thing the living benefit has is it has those 3 levels. So you've got the terminal illness, you've got the chronic illness, and you've got the critical illness. It's virtually the same that Ethos has. I think Ethos basically copied Transamerica. Okay. So the cool thing about this is if I have a $500,000 policy where the death benefit's 488, now this is a little bit easier to explain how it works. So like I said, if you have a critical illness, you can maximize up to 90% of your death benefit. So that's 439,000. Now, you're not going to get that. What they're going to do is they're going to create a life expectancy. So if they figure life expectancy is about 20 years, they're going to give you 88,000. If they think it's 10 years, they're going to give you 204. If they think it's like stage 3, stage 4, they're going to give you 350. Now, keep in mind, the only people that are doing this need the money because a lot of people get all bent out of shape saying, well, I'm paying for all this and I'm only going to get 48,000 in death benefit because I accelerated it. Guys, keep in mind, they're only going to do this if they need the money. And so in this particular case, person's 43, let's say in 2 years they get stage 3, stage 4 cancer. They've paid about $1,200 in premium, and Transamerica is willing to give them 88,000 to 350,000 at a time where they need it the most. Again, Zane, just by shaking your head, is that a good deal? Now, is a traditional term plan going to do that? See, guys, I got to tell you a story about this living benefit. So back before COVID, before there was enhanced subsidies, we were kind of where we are now. There are some people, because they make a lot of money, they don't qualify for a subsidy. And so I was meeting with this contractor in Crown Point, and I'm showing him this, and he's like, Steve, I don't need this. He goes, I got 1.3 million in life insurance. And I said, well, that's great, but you're a contractor. If you're not working, how much money are you making? He goes, nothing. I said, well, how much of that 1.3 million can you touch if you get cancer and you can't work? He goes, none of it. I said, well, this, you could get this amount. He goes, okay, I'll take 200,000 on me and just throw 100,000 on my wife. Okay. Now, a year later, His wife got really sick. She went to the hospital and she passed away from a freak disease. Okay. They had no health insurance because he refused to pay a couple $1,000s a month for health care. Guess what paid her medical bills? The $100,000 life insurance policy that was a tag along because I had the courage to challenge him on his 1.3 million. Because this isn't about the death benefit. Your 1.3 million's useless if you get cancer and don't die. Now, I'm not saying get rid of it. I'm not going to replace it, but we got, like you said, he just got a $200,000 policy more for the critical illness portion of it. Okay. And so when we do this, so keep in mind on Ethos Living Benefit, what was the premium for a 20-year term? 100 something?
Yeah, 110, I think.
20-year term, $88. Not only do you have the income protection option, which let me tell you about that. When you're sitting down with a husband and a wife and you look at the wife and say, now, if John passes away, do you want a $500,000 or would you rather get 260 up front and get his paycheck for 5 years? Guess what she's going to say? I want his paycheck, which means guess what he's going to have to do? Buy the plan if he wants to stay married. Otherwise, he's going to have to change beneficiaries because there's a divorce in the future. Because guys, life insurance isn't about us. It's about our beneficiaries. And so if I have a wife who would rather get a paycheck than a lump sum, as a good husband, what should I do? I should get that for her. But then if something happens to me and I don't die, I have this to protect me, which again, you guys just told me my current life insurance isn't going to do that. So there's easy ways to close this. Go ahead, Sandra.
So in this scenario, let's say he does pass away. She has this benefit that pays out for over the next 5 years.
Mhm.
If she passes away, say year 3 of that payout, what happens with the remaining balance?
It goes to the kids or their estate.
Okay. So they do specify the contingent beneficiaries in this case.
Yep. Or if you got a will,
Yep. Yep.
just go to the kids. Now they may just do a lump. I mean, if it's not designed for to go to the kids in a payment, they may just give the kids a lump sum.
Mm-hmm.
But it's going to go to.
It pays
It
out.
doesn't just disappear.
It pays out.
Yep. So when we're looking at this one again, an $88 premium, anywhere from $485 to $678 in advances, and $1,300 to $1,800. And again, you guys are looking at this 60 to 85% commission. We don't have anything close to this. Okay. So any questions on needs analysis or Ethos or Transamerica to fill a need?
I have a couple of questions on Ethos. Originally, it was in Quote Connect, but then it kind of disappeared.
Mm-hmm.
Does that happen for everybody, or is that just me?
I can explain that because that happened to me, Jim. So I was appointed with Ethos. I hadn't sold anything for a period of time and it disappeared. So they just said, don't worry, you go back. Actually, you can um, go into Ethos and quote it directly there. But it will, and you can let Rachel and
It's just Sandra froze.
Yep.
Sandra, you're froze. Hopefully you'll come back. But guys, I'm glad you brought that up, Jim, because when it comes to quoting life insurance, quit quoting in Quote Connect. Go to the vendor because you can print out illustrations. You have much more flexibility. Some of the things that you can do with these plans, you can't, like, for example, you can't quote the income protection option in Quote Connect. It won't do it correctly. So
Okay. Another question is, I've when you quote someone and then you get either the price is too high or maybe you get rejected.
mhm.
So, then you go somewhere else and then they always kind of ask you, have you recently been denied? Do
Be
you?
truthful and say yes, because again, not all life insurance companies are gonna, The reason they're asking that question is not so they'll deny them. When they hear that they've been turned down from another company, it's just telling them we need to look a little deeper.
Okay, but we
I've
don't
had
have to.
people that have been denied by certain companies and they weren't denied by other companies.
Okay, so but if they just rose the price, that's not a denial. I mean, denial is no.
Yeah, so in that case, you say, hey, I got good news and bad news, Jim. Good news is they accepted you, but because of something they found in your health, that quote I gave you for 80, it's now 130. So we can either keep it as
Yeah.
is, or we can make a counter offer and lower the term, lower the death benefit, and keep you around the same premium. Which would you rather have?
And what do you think about Securian?
Securian, stay tuned next week. They're designed for the permanent plans, not the term. If you're going to do term, you need to do Ethos or Transamerica because again, they just have more flexibility on things they can do. Because Securian doesn't have a living benefits plan, and if you haven't kind of heard me loud and clear,
Yeah.
living benefit plans need to be our term plan.
Okay.
Does that make sense?
Yep.
Okay. Now, in the few minutes we have remaining, I'm going to talk about some additional term life options for certain situations. So what we just talked about was getting people their number. Again, I truly believe if you're getting people their number,
This is very frustrating.
do an Ethos Living Benefits or do a Transamerica Living Benefits if you can. Okay. So, but there are some other products that we can use for certain situations. And so the first one I want to talk about is the UHC Term Life Safeguard. This is a phenomenal plan for single people. Why is it a good plan for single people? Because first of all, single people don't think they need life insurance. Okay. Second of all, most of the term carriers we have require at least 100,000 in term, and a single person's like, I don't need 100,000. But the nice thing about the UHC Term Safeguard is that I can get, a $25,000 death benefit, but it's also got 25,000 in living benefits. And so I can sell this to them as, look, this is something that if you get cancer and you can't work, we can give you 25, 50, $75,000. And if you happen to pass away, someone's got some money to clean your mess. So again, you can almost sell it to a single person as a critical illness plan. So here's how I quote the term life safeguard. I just do a 25,000, 50,000, and 75,000. And so when I pick the 25, 50, and 75,000 death benefit, now this is where I would use Quote Connect. You can go in and just say, I want 25 death, 25 critical illness. And so when I'm explaining this to people, I'll just say, now, Jim, if you get cancer and you can't work for 2 or 3 months and we give you $25,000, would that help you pay your bills?
Yes.
Okay. So do you want the 25, the 50, or the 75? And they just pick a plan, right? And most of the people will take the basic for 43 bucks. That's worth it to them. Okay. Some will go with the enhanced, very few go here, but most people, they'll, 25 to 50 grand if they can't work and they're single. See, that's why this is a great plan for them. Because yes, they need life insurance because somebody needs to clean up the mess. But more importantly, they don't have anyone to rely on if they can't work. So that's why this is a great plan for single people. And again, it's a 56% commission for tier one. And it's the only life insurance product we have that's 2.85 weighted, where all the other life insurance is 2.0. So again, this is just something that I could throw on to help single people. And I've got something that's going to take care of them and also give them a death benefit. So I'm kind of getting them the life insurance, but I'm focusing on the living benefits. So
I just did one of these. No, I just did one of these for a single mom just a couple weeks ago. So she had life insurance, but I said, this having this little bit of extra, and she went with the 50.
Yep, I just did it on a 27-year-old. 50,000 was like 12 bucks.
Yeah, I think hers was like 23.
Yeah, it's crazy. And you can do this plan all the way up till someone hits age 60. So 59 and below, you can do it. I think up to 49, you can do a 20-year term. And then 50 to 59, you can do a 10-year term. And they even got a lower benefit where you can do a $30,000 death benefit and 15,000 in critical illness. That's what I sell mostly to people between 50 and 60. And it's still a 40, 50, $60 premium. But think about this. If I sell them a $10,000 critical guard to take care of their max out of pocket, and then I give them another 15,000 to help pay their medical bills. See, I'm not saying sell this in place of the critical guard. I'm saying sell this in addition to. Okay? Because you're just giving them more options. So, any questions on the critical guard? All right. So, now I'm going to talk about my favorite. It's the Mutual of Omaha Term Life Express, which in my opinion is the best critical illness plan we have. Matter of fact, this is the critical illness plan I have on myself. Now, I do have the old cancer-wise and from the old Clico stuff, but this is my primary critical illness package. And so how it works is it's a $100,000 life insurance plan. And it'll pay in 4 scenarios. So worst case scenario, you pass away unexpectedly, your beneficiaries are going to get $100,000 of income replacement. Notice I didn't say life insurance. Income replacement. Why? Because we got to protect them from medical bankruptcy. Scenario number 2 is you get diagnosed with a terminal illness. That's less than 12 months to live. So how this is going to work is you can accelerate 80%. They're going to take care of some actuarial adjustments, but you're going to get close to $76,000. So Jim, let me ask you a question since you're still unmuted. If you get diagnosed with a terminal illness, is that going to affect your ability to work?
Yes,
So if we gave you a check for $76,000, would that help your family?
it would help a lot.
Okay. Third scenario is you're going to get diagnosed with a chronic condition. Again, I can't do 2 of the 6 daily activities. I got a cognitive impairment. And again, this thing does just like the Transamerica. They're going to do a life expectancy evaluation. So if they do this and you've got a 15-year life expectancy, out of that 100,000, they're going to accelerate 80 of it, but they're going to give you 33,000 bucks. 8-year, they'll give you 59. 3-year, they'll give you 65. So in other words, if I have a chronic illness or if I have a critical illness, I'm getting between $30,000 and $60,000 depending on the severity of it. So how I sell this is I sell the 10,000 critical guard. I sell this in a short-term, long-term concept. The critical guard pays on diagnosis. So you get diagnosed, you send in a pathology report, you're getting 10 grand. Why do we need the 10 grand? Because this is going to take them a little bit of time to figure it out. But if I still need the money, now I've got both paying me. Okay. So here's how I quote it. I do 100,000. I just do the 15, the 20, and the 30. 15's 39 bucks on a 43-year-old. The 20 years 46, the 30 years 62. And it's just basically, which one do you want? And this is actually the very first product I show people. I show this before I show the GRIC. Okay. But here's why. It's the highest commission product we have. A tier 1 is 70, almost 77%. A tier 4 is 108%. Now, I can sell a critical illness product and get 27%, or I can sell this and get 77%. And again, if I'm spending 40 bucks a month, that's $480 a year. Let's say I've been on this for 2 years. I get paid, I pay a little under $1,000 and I get $30,000 to $60,000 back. Sandra, is that a good deal?
Absolutely.
Because I'm not selling it as life insurance, guys. Yes, if you die, it's 100,000 of tax-free income for your family. But if you don't die, It's going to be anywhere from $30,000 to $76,000, depending if it's critical to terminal. That's why, in my opinion, this Mutual of Omaha is the best critical illness product we have.
And I do believe that if they do make a payout and you're remaining with the $20,000 life insurance, the
Yeah.
premium does get adjusted.
Oh, it sure does.
So they're not still paying the same amount.
Yep. Yeah. And you still got to, so I even sell this plan to single people because I can show them, look, over the next 20, 30 years, you got a better chance of having a heart attack, cancer, stroke, and not dying. But if you do die, you got the money, someone else is going to get the 20,000 to take care of you. So any questions on this plan?
How's the experience with underwriting? I think
It's very similar to
simple.
all the other ones. And again,
Mhm.
Mutual of Omaha, they do a real-time application. So while you're filling it out, they're hitting all the data. All these life insurance plans are going through data points.
Mhm.
And so a lot of times with this plan, by the time I get done, it's a yes or a no. I already have a policy number. And guys, I got to tell you something. I got this plan. So you want to talk underwriting, Sandra?
Yes,
I told you I have this plan on myself, correct?
yes.
I'm a type 2 diabetic. And they gave it to me standard. Because they checked my records and saw I'm just on metformin.
Mm-hmm.
So yeah, I got this a couple of years ago as a type 2 diabetic. Can't do the GRIC with that. Can't
Nope.
do ethos with that unless it might be highly rated. So, I mean, I'm just telling you, the underwriting's good because they're looking at other things.
It depends on the kidney disease, Lauren.
Yep. So, I mean, guys, the nice thing about life insurance, throw it against the wall and let the insurance company tell them they're uninsurable. I'm not going to make that judgment call. I will write a life insurance policy on anybody who wants me to. And then, okay, you can't get it. That makes guaranteed issue products almost a done deal. So,
Yeah.
so
Are
again,
you
if you're not contracted with Mutual of Omaha, I highly recommend you get contracted with them for this product and then for this product, the Children's Whole Life.
Yeah, and you can go into Haas to do your carrier appointment for Mutual of Omaha Life.
Okay. So again, the reason you want to do this is going to do two things for you. Number one, it's going to, kids do die. And if anyone's experienced that, I'm sorry if I brought up wounds, but it does happen. But number two, this protects their insurability because how this works is once they hit, I think, age 22 to 32, Mutual of Omaha is going to send them letters and ask them if they want to increase their death benefit with no insurability. Again, some of you have heard the story of my great nephew Liam, who I sold this plan to him when he was 9. When he was 12, he got diagnosed with juvenile diabetes. He's uninsurable on life insurance unless they change something in the future. Okay. But he's going to be able to get, I think, up to 250 or 300,000 if he wants to. Okay. But the beautiful thing about this is if you just print out the brochure, you don't even have to run quotes on it. They just have the prices right in the book. So I can sit down with if you got a 5-year-old kid and you want 50,000, it's $23. And I believe on the Mutual of Omaha, you can do up to 8 kids on one application. So if you're dealing with the Brady bunch, you can do all their kids at what time? Because the parents will, the one parent will be the owner, but then when they get of age, they can switch ownership over to the kids. But this is a great way to help kids. And again, guys, it's a 50% commission. So I know we're running at the top of the hour, but I have asked Kevin, who's our new life insurance guy, to show something else that he's doing with permanent life insurance and kids. So, Sandra, is Kevin allowed to share his screen? Or are you going to share your
Absolutely.
screen, Kevin, or just talk?
I can share.
You can definitely share.
And again, he's hit what, 11 or 12,000 FYCRs in your first month?
Yes. So like Steve said, this is the highest commissionable product that we sell, life insurance. I will try to keep it quick. I know Steve promised me at least a half hour, but he only gave me minus
I'm
10
just doing
minutes.
you what
So
Silas does to me every week.
now I know how
Yes.
it feels. But we'll keep it short and sweet. But like Steve, I sell on living benefits. So a lot of people have a negative stigma with death benefit because it doesn't benefit them. If they pass away, my family can take care of my funeral expenses, so on and so forth. So my focus since I've started has been on IULs, just because of where I'm at and all my friends have kids and stuff like that. The biggest thing that I've heard is that I'm sure you've heard this. My kids have so many toys. I'm sick and tired of buying toys for Christmas and for birthdays. And so that is a trigger for you to jump into this product. So, you know, my question to them is, hey, if you're spending all this money on toys and stuff, what if I give you an alternative to put the money somewhere else that can pay them in the long run? Well, show me. So then what I do is, I encourage you guys to walk through this system, but you have to narrow down your products because, I mean, coming here, you can overwhelm yourself with all the stuff that's offered with all the carriers we have. So Steve gave some great options with Ethos and Transamerica. I'm a Transamerica guy just because their stuff is, I feel like it's pretty easy to show the client and walk through the system. So to do an IUL, you just click on Transamerica. I have it tabbed and bookmarked here. My login is saved. You just log in. And what I do is they have this new Express product that issues within literally 10 minutes. So as long as this person qualifies, which all kids usually do unless they have some birth defect or something, or history, this is going to get issued. So not only are you spending literally 10, 15 minutes doing something, you're going to get paid right away. So you click on, you click on the Express app there, right here. Final Express, and then the IUL Express online application. It's going to take you to this screen here. All your applications are in here. As you see, completed. All these took 10 minutes to do. Get a quote, and this is where you put information in. So Steve just told me to put in somebody that's 5 years old, and I'm going to show you what the benefit is when you show them this product. So Indiana, juvenile, and then continue. And jump in, stop me if you have questions or whatnot. But I'm just going to try to keep this as simple as possible. This is what I do. So they break it down for you. So Securian offers this product as well. But I feel like this is better. Plus, the commission on Securian is 52%, I think, or 55. This is 70%. So know your count, work your count. There's three options. Maximize protection, which is going to give you the highest death benefit for the amount of money that you're going to pay. Usually this premium is low. Target solve is usually going to be in between your max protection and max cash value. In this instant, if someone is looking to put money away, they're saving money for their kids, we want to do maximize cash value. What this does is it helps cash grow fast and it gives you the lowest death benefit. Okay. So in this instant, we're going to go ahead and click max cash value. We're going to go solve for face amount. This is where you sit down and do the needs analysis. Hey, how much do you want to put away for your children every month? Is $100 a month okay? Oh yeah, that's fine. $1,200 a year, I'm okay with that. So we're going to put the monthly income here. What it does is it's going to go to automatically calculate your death benefit for that child, $169,000. So don't worry about this. I'm going to show you how it builds over time. This is your monthly premium. And then it's going to show you at age 65 how much premium we have paid in this policy. $72,000. And because this is an IUL, Index Universal Life Fund, it's going to be, you're going to have $655,000 in cash at age 65. So if you can pay $100 a month for the next however many years and have $655,000 in cash for your child after only paying in $72,000, are you going to be interested in that? Absolutely. So there are things that you can play with. I'm going to, like I said, keep it simple. So you can go down these advanced options and you can tell that policy to illustrate when you want to stop premium payments. So in this case, typically no one wants to pay bills after the age of 65 after retirement. So we're going to stop payments at age 65. If they're maxing this out, so in this particular case, the max coverage is $250,000. So I believe it's typically around $150 a month that you could put in here. If you want to do more, you're going to have to go to the full underwriting product. But this is a great product to do within, and most of the time fits with everyone's budget. Once you do that, you can also illustrate an income payment from the cash value that is developed over this policy. So I'm just going to go ahead and add it in here so I don't have to go back and forth. But we're stopping premium payments at 65, and we're going to go ahead and start income payments to yourself from your own policy at age 66 for the next 20 years. Okay, the rest of it you don't need. Just hit calculate. It calculates it for you, and then all you gotta do is hit this download illustration. Put a name in. And this, I encourage, do not do this over the phone. Do not do this on a Zoom call. Have them sitting in front of you because it has way more value when you're sitting here. And then you can also pick out the pages in this illustration that you want to show them because you're not going to show them all 40 pages of this. So I just exit out of this side right here. That's not important. I keep this here because it helps you tab through what you want to show them. So what I'm just going to do is I'm going to go to tabular detail. It's going to give me the same stuff that was on that summary screen. So $100 a month, $169,000 in death benefit. Okay. So the key ages that I'm usually going to show them are 25, 40, and 65. They want to know how much cash is in that policy. So if we pay into this policy for 20 years, so we go to age of the insured is going to be 25. This is going to show you how much premium has been paid into this policy. So we're a little short of 24,000 here at age 25. There's a little bit of gain, 32,000. Okay, not a lot because it's going to be on the back end, not on the front end. Then we go to age 40. Age 40, we paid a little less than 42,000. Now we're at $112,000 in cash value. And now look at that. We started off with $169,000 in death benefit. The death benefit has increased to 281. So that's why I said, don't worry about the death benefit up front because we'll worry about the cash value growing. And then here we are at age 65. We are looking at $655,000 in cash and our death benefit is now $786. Okay. And we've only paid $72,000 in this policy. Now, if you go down here, this is where you see parentheses. This is going to be where your income payments show. So now they automatically calculate with how much cash is in there over the 20-year period. What is your max payout in income per year? So they have calculated this automatically for you to show $59,000 in income payments per year. So we're going to go all the way down because we're paying 20 years. So we're here at age 85. We have made $59,000 in payments over the 20-year period. We still have $42,000 in cash on this policy. And the death benefit is still $113 at age 90, at age 85. So then this policy will slowly decrease because the cost of insurance will continue to grow as you get older. But if you go down here to age 100, we still have $5,000 in death benefit and $2,000 in cash, and you haven't made a payment since age 65. So if you show them those key points, this is a no-brainer, right? If someone's already putting money away for their children, why not put it in something like this where the premium never changes and you have cash build up? And then they ask you, why don't I just do this myself and put it in the stock market? Well, here's why. So this is a new illustration they show. I like the old one better. This is the old one. So you can pull up the screen, the historical data. This is going to show you the average over the last 5 years, which is almost 12% there. Can you guys see that? 12%. Over the last 10 years, it's almost 11% and then 11.48. The best part is if the stock market were to crash like it did in 2008 at negative 27%, the floor on this policy is 0.75%. You do not lose any money on this policy. And then when you show them the average of 10% over the last 25 years, it's money in your pocket. Not only are you putting them in a great situation, but you're also helping yourself because once they say okay to this, you hit the start application, you put the information in. I guarantee you in under 15 minutes that'll be approved and paid for, done.
And the cash that they're receiving is not taxable.
Correct. You can pull money out at any time after 10 years, tax-free and interest-free.
So again, guys, that's why I wanted Kevin to show this because, I mean, next week we're going to talk about some of these IULs and stuff for adults. but I think if you're running across someone who has kids, you either do the children's whole life through Mutual of Omaha if they're budget conscious, but if they're willing to take a look at this, because the beautiful thing is, if I got a 5-year-old, by the time that 5-year-old's 20, what's he going to have to pay? $100 a month.
Hey,
And if he
Kevin,
does that, he's going to have a lot of money setting aside. But more importantly, there's also a really good death benefit if something happens. So we can set these kids up for life and again, the younger, the better. Isn't that true, Kevin?
Yeah, the cheapest any life insurance is going to be is today.
Yep. Well, and again, this whole thing's built on compound interest. And so that's why you can't show this to me. I'm 57 years old. I'm not going to be able to put enough money in it to make it worth my while. But I show it to a 15-year-old or a 20-year-old who, again, they're not putting a bunch of money in a 401k, but man, if they can throw $100, I mean, that's a Friday night with their friends. Start saving, because again, most people don't save, but again, if you can use life insurance to do this kind of stuff, and you just need
question about this product. What is the issue age? How young?
You can do as soon as they're born. So as soon as they come out of the womb, they have a social security number. You can write this product. You just answer. I think there's probably 10 health questions you answer. It goes up to the juvenile product goes up to age 18. And then once you go to over the age of 18, there is a adult product for anyone that's over the age of 18, and you would just select that. So here you would just select the adult Transamerica IUL, and then you would just put their age in, and then so this will be a standard rating. There is no preferred rating. If you feel like that 20-year-old is in a healthy stage of their life, I would go to the fully underwritten product and then go ahead and do that as a preferred plus or preferred rating. They'll get a better rate on it, and then it would only take a few days instead of instant issue, maybe 3 days to issue.
Well, and I do want to share that I think all of you, if you're going to sell life insurance, need to get familiar with this site, because we were told that June or July, the living benefit plan is going to be in here. And if we can start getting these things approved instantly, you want to talk about cash flow. So yeah, the living benefit is going to be put in this express issue thing.
Nice.
Yep. So I know we went a little bit over, but Kevin, thank you for your input. And I'm sure we'll probably ask you some questions next week too, because with your life insurance background. But again, guys,
feel free if you have a situation that's on the top of your head or you want to walk through, shoot me an email. I can get with you and share my screen and work through it with you guys if you guys want. A lot of people have helped me in this first month that I've been here. I've been very appreciative of it, and I would love to help anybody out that is looking to get into the life insurance portion of it, because like I said, it is the quickest way to move up the chain.
Yep.
Thank you so much, Kevin, and thank you, everybody. Steve, any last thoughts?
Nope.
All right.
Again, guys, I guess I do have a last thought. Take life insurance seriously, guys. Because here's the one thing that Dallas Richens said that has stuck with me. Life insurance is the only product we offer that the federal government hasn't put their hands on in 30 years. We have no idea what's going to happen with health insurance. We have no idea what's going to happen with Medicare. But again, life insurance is here to stay, and life insurance is the only insurance product you're guaranteed to use unless Jesus comes back. Okay? So the beautiful thing about what we have is when we talk to life insurance companies, they said the one thing we have over everybody else is we have a foot in the door with health or Medicare. And again, next week, we'll talk about Transamerica's final expense plan for the senior market, which is phenomenal. I mean, the underwriting on these express issues are so more lenient than the other companies. That's why the more things we can run through this Transamerica, I think it will become your primary life insurance company. So with that being said, next week we're going to talk more permanent stuff. Silas should be back. And if you have any questions, don't
No,
hesitate to reach out.
absolutely. Have a great week, everybody. Thanks for staying on today.